Hello everyone, my name's Dean. Let's talk crypto. This is where you subscribe for daily Bitcoin updates and technical analysis. We track the price of Bitcoin as a proxy for the cryptocurrency markets at large. Today is December 26th, 2024. And I think our move to the downside is almost here, but it hasn't started quite yet, and I'm going to explain to you why that is. A lot of people are going to be fooled by what happens next on the small time frame, but I'm going to explain why. Before we get the big move to the downside, we should expect a small move to the upside. Guys, if that sounds interesting to you, then watch until the very end. Hope everyone's having a great day. Let's get started with Bitcoin as per usual in the hourly time frame. Okay. The principle of first making a move in the opposite direction before the move you want or before the move you anticipate is very common. Very common. It's time frame agnostic. It's a small time frame, large time frame. You always see it in the charts. And it trips up a lot of amateur traders and chartists because they're always thinking in terms of a straight line. But actually, in nature, what you get is action, reaction, action, reaction, action, reaction in increments. Okay? And then finally you get a big move, but it's not just in one fell swoop. Let me explain this on a higher time frame. And I know I have a lot of new subscribers, so I think this is apropos. A lot of people are saying, oh, your analysis is stupid because you think 108K for Bitcoin is the top of the bull market. And I keep saying, no, if you watch my work and you understood or even watched the whole video, you would understand I don't believe that the bull market has yet started. And just like every other bull market in Bitcoin's history, and on this chart that I have, the Bitcoin US dollar index, I have four clearly marked actual bull markets using my Elliott wave analysis of Bitcoin's price history from the beginning. Okay, you can clearly see that every single bull market first starts with a strong move down before a rally to the upside. Okay, so first a strong move in the opposite direction, then you get your rally, then you get your initiation. It's almost like when you start a motor and you have to pull on a cord. You pull on a cord the opposite direction and it snaps back. That's exactly what you see in nature or in these charts, which is same with nature, right? Because the charts represents the buying and selling patterns of human beings based off of their emotions of fear and greed. So what you see in 2010, 2011, 2016, 2020 is that big drop to the downside, followed by the initiation of a bull market that really melted faces. And this is no different than what we are prognosticating in today's market, right? People who think that the bull market's going to start with some choppy chop bullshit and then we're just going to go up, that is inconsistent with what we've seen every single time. This would be the fifth bull market by my count. Okay? The fifth bull market in Bitcoin's 12 to 13 year history. So, and my definition of bull market, I'm not going to go into that, but based off of this chart, based off my understanding, this is the fifth such bull market. So again, the idea that I'm saying the bull market has yet to start, and I'm waiting for that declension, that drop down, that quick move down to the 66 or 65 to 70K region before the bull market starts is consistent with what we've seen in the past in Bitcoin. That being said, we can apply this same principle on the small time frame. Okay, let's go back to our chart on the small time frame. So on the hourly time frame, as we can see here, Bitcoin has been in this distribution, okay? And for those of you who don't know what a distribution is a term that refers to Wyckoff's analysis of how price consolidates and turns from going up to down, right? The idea is you don't ever see price go just in one direction, then the other direction, and then in another direction sustainably without first putting in some sort of consolidation on any time frame, right? You see wicks, but those are unsustainable, right? This wick, no consolidation, went down, went back up. But then what happens? It comes back down and rebalances the chart, right? Again, sustainable, that's the operative term. When you want a sustainable move down or a sustainable move up, it has to be preceded by some sort of consolidation. Consolidations from up to down are called distributions, right? Down to up accumulations. So this distribution of 30 plus days, it is meant to result in a big move to the downside. This is what I've been reading on the charts for the past month plus. Now, when you look at the top that we formed some days back at 108, you can clearly see it consists of an impulse to the downside, a corrective impulse, but an impulse nonetheless. And that impulse, if you look at it, it's just the same thing that you would expect, right? You don't go down in a straight line. You go down, counter, move, counter, move, counter, move. I would say this is the move, counter, move, counter, something like that, right? Or maybe this is the move, this is the counter right here, okay? So we have this compounded counter, or this compounded move that is pretty much the negative. You can call it the negative, because right now the down moves are the positive moves. That's what has all the liquidity. That's what gets the volume. If you have a volumetric analysis, if you do a volumetric analysis of the price action, you'll see that anything down is supported, meaning it's like there's backing behind it. People are selling more than they're buying, and that's where the strength in the market is. It's a down market. So any move up is against the grain, and here you have this compounded move against the grain. This is what I want to talk about, okay? This compounded move against the grain is not finished. Right here, I count 1, 2, I want another one. Like DJ Khaled, I want another move up to complete that move, okay? Because what I'm seeing, based off of what I understand in corrective price action, based off of Elliott wave analysis, I'm always looking for flavors of 3 in my corrective waves. So if this is my A wave, right, my initial break of structure, that's like the initial wave that counters this, yeah? Then my B wave is in and of itself a flavor of 3, okay? So A, B, and that B wave, the aggregate motion, the aggregate direction of that B wave is going to counter my A wave. So if my A wave goes up, my B wave comes down, and then my C wave goes in the direction of my A wave. And that is my complete, I would call this a complex flat correction. I hope I haven't lost anybody. Let's do that again. And this is important because this shows why fundamentally or technically we can see, and I'm going to show another reason, why we can expect a move in Bitcoin to the top of this purple range before a strong move down. Again, every strong move down, time frame agnostic, small time frames, large time frames, typically is preceded by a move in the opposite direction. So it's almost like I've seen it so many times, I've experienced it so many times, and lost so much money against it. I've won money with it. I've seen it. The market can't fool me. There's only so many times the market can fool me. The market's going to shake some short sellers out. People who have correctly deduced that the market is very likely to move down with this and are entered in their shorts, but don't foresee the move in the opposite direction before the big move in the direction that they think are going to get shaken out. I've been that guy. So this is why I'm making this episode on the short time frame of what you should expect for Bitcoin and altcoins to do. I'm going to show you altcoins in a moment. The idea is this. Don't be fooled when you see Bitcoin going up quickly 5-6%. Okay, once again, this is my initial break. Call it an A wave. Let me rewind. You may have heard of a flat correction, something called a flat correction, an ABC flat correction. It's thrown around social media a bunch by people who talk about, this is the flat correction, whatever, right? Even if you have a different type of correction, a zigzag, for instance, that's also an ABC, but it's called a zigzag, okay? Different type of correction. But these corrections, once again, you typically see in flavors of 3. Let's say this is our A wave. And let me also say that these corrections are hard to predict exactly because by definition, corrective price action is capricious. It's unpredictable. It can take so many shapes and forms. It does follow certain rules, but within the bounds of those rules, it can express itself in manifold ways. So I think this is A. I think what we saw here was a type of B wave. Okay, and I want to say this because the last wave of every corrective pattern, it doesn't matter if it's a flat or a zigzag, if it's compounded, if it's complex, if it's simple, the last wave is always impulsive. This to me looks impulsive. So I want to say this is my B wave against this A wave. And it satisfies the Fibonacci retracement. So this B wave, if it's a flat correction, if this A wave is a flat correction, this B wave has to come down to at least the 786 or 78.6% of this A wave, and that already happened. So mathematically, that's okay. And I can say that what I'm expecting now is the final wave. So again, finally, what you should be getting is something like this. And I would not be surprised if you come back to the scene of the crime, back to the resistance that the old support that was support, but now that is new resistance, that you're basically saying, well, we don't have enough liquidity to go beyond that point. This is what I'm seeing for Bitcoin. Don't be surprised if Bitcoin comes back up to 100K very briefly, impulsively, quickly, and then doubles back down to our first target and flies down to our first target of 75.6. Again, none of this, when you're expecting a big move, none of these big moves are done slowly. When they're impulsive, they're done quickly. That is the nature of impulsive price action. It's quick. If it's not quick, then it's not impulsive. It's corrective. That's a key. This was quick. That's impulsive. That means that most likely, more likely than not, that tells me that that is the final wave of that B wave. And if I have A and B, I know that I'm waiting for C. C, the last wave of any corrective wave, again, is impulsive. Do you expect for that to happen? Very high probability read. Coming back to the scene of the crime, which is 100K at this point in time, people are going to be rejoicing. 100K, 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 we broke it, we broke it, we broke it. But they don't understand that that is actually the calm before the storm in the opposite direction, because price always before a big move effectuates a big move in the opposite direction. And people call that a fake out, but it's just, natural price action. How can you take advantage of this? In altcoins, look at what altcoins are doing. Similar thing. Okay, look at this. So altcoins on a high time frame, they are at a top. Okay, they're clearly at a top. If you look at a chart, and if you're not diluted, you can see that there's clearly a double top structure right here. Okay, there's a resistance that altcoins are at, right? That came down. That's an accumulation. We came up. This is the target hit. You need a proper retracement, capturing liquidity before moving back up. Okay, that's normal and natural. Again, if you haven't diluted yourselves, you can see that. Okay, that is more likely than not the case. You're putting in some sort of leading diagonal, because that's what it would look like. Once you get this retracement, right, at the end of the day, you get this, and then you can make a higher high right here. Then you get another, and then you finally break the bounds of this wedge that you're in. Okay, I think that's pretty straightforward. Now, altcoins, given that they are also in their own kind of distribution, look at this. Right here. They also are expected to make a higher move, or a move to the upside before a quick move to the downside. Ergo, this dotted line trajectory that I have in, okay? Here you have a clear resistance, okay? That's been tested time and time again. This is the initial break of structure, or A wave. This is the counter, or B wave, okay? Again, this is the direction of the impulse, or the direction of the correction, the direction of the new trend. This is the counter. Direction of the new trend. This is the counter. Right? So you have A, B, A, B, A, B. Okay? So I think this is my count. A wave, B wave. That's my first. I'm counting 2 degrees of baby basing. This is Elliott wave theory. How many waves are necessary for a completed change of direction, a la Elliott wave theory? I've talked about Wyckoff analysis, but in Elliott wave theory, you need 3 pairs, at least 3 pairs of AB basing. So this is my first pair. I call that AB. This is my second pair. I call that small a, small b. Okay, this is my third pair. This is my pivot. Call it alpha and beta. I think beta goes up here and puts in a zigzag, right? Makes a slightly higher high, acting as if this resistance that we've had since the beginning of December is going to be broken, and then pivots in the same hourly 15-minute candle down, okay, to our target. Again, this is quick stuff. So you kind of have to see it before it happens, because you're not going to be able to react as it's happening. Very unlikely that you will be able to. This is what I see in altcoins. This is what I'm seeing. Obviously can be wrong, but mentally I'm preparing for volatility in the opposite direction before the move I'm looking to trade. Okay, if I'm going short, I'm going to be careful about this move. So please do the same. Guys, last thing I'm going to leave you with. And again, if you found value in all of this, please like, share, and subscribe. Consider buying me a coffee by Venmo, sending me Litecoin, or Cash App, all at the pinned comment below. So last thing I'm going to leave you with is the Bitcoin dominance. Look at Bitcoin dominance. Look at what it's done. A lot of people, like I've said in the previous videos, are misreading this, okay? They're correct in that we're close, but we're not yet there, because again, if you understand basic technical analysis, you know that price can't just go up and then down in a sustainable way. it first has to put in some sort of consolidation. If it's up to down, that consolidation is going to be a distributive channel, okay? And this is what we said some days ago, that we were expecting a distribution at resistance, right? Because this was the top for Bitcoin dominance. Again, for those of you who don't know, Bitcoin dominance is a measure of Bitcoin's dominance vis-a-vis the rest of the cryptocurrency markets. When Bitcoin dominance is going up, that is what we call a bear market. Bitcoin's gaining against the altcoins. When Bitcoin's dominance is going down, that's called what we call a bull market. That's what we call Altseason, where you get rich by investing in altcoins. So everybody anticipates and looks for that signal. This is a very important indicator. But what you can see here, you got to move down, and then you came up to the scene of the crime. The lost support now is new resistance. What you should expect is a chop, okay? That's the idea. More specifically, on the smaller time frames, what you can see here is similar to what we're seeing in the rest of the cryptocurrency market, albeit this is in an indicator, right? You see an initial break of structure. That's a 3-tiered move. That's an A wave. That is a corrective pattern, A, B, C. That's what we call a zigzag in LE wave parlance. What you see here is a flat correction. It's flat, because that base is flat, okay? What you should expect is this. A, B, okay? So that move down is the move that I anticipated in the charts for Bitcoin and the total 3, the altcoin chart, the aggregate altcoin chart. Move down in Bitcoin dominance tells you very likely that you're going to get a move up in altcoins, right? So this is what I am anticipating, and followed by a quick pivot up. That quick pivot up is the big move down in Bitcoin and altcoins, okay? And then again, a pivot here, and that's the beginning of Altseason proper. So this is what I'm seeing. All the indicators are corroborating this. So basically the purpose of this video, just to recap, is I hope you do not, even though you've been following my calls, you've been following my analysis, and you're like, well, I agree with Dean that we're going to go down to 76.4 and then subsequently to 66 to 70K. I agree with Dean. I'm going to get into some shorts. I'm probably going to join KCEX because he keeps shilling it, and it seems like a good exchange. I'm going to enter some shorts. I'm going to, make some money trading and then use that when the bull market starts. He seems like a good guy. He seems like he gives good advice. I do not want you to get tripped up by that. That is what a seasoned analyst, a seasoned trader looks out for. And I'm sharing that with you. All right, that's it. Like, share, and subscribe. Consider buying me a coffee, either by sending me Litecoin, Cash Apping me, Venmoing me, or signing up for my crypto portfolio consultation service. I only have a few spots left because I do spend 1 to 2 hours with each one of you every month, and helping you balance your portfolio for up to 5 assets and giving you key entries and exits per month for each one of those assets. So there's only a few spots left for that, and you can sign up on my Buy Me a Coffee website at the pinned comment below. All right, that's it. Take care. Bye.